Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the bullish scenario where we are looking for a three-wave corrective structure, after which we want to see continuation to the upside. In this case, I'm talking about a double zigzag, an ABC structure in wave W, where the low here was made on a high amount of volume, which is also typical for a corrective structure. Then we have a wave X and another ABC to the downside in a wave Y. The common target for your wave Y is between the 1 and the 1.236 trend-based sub-extension taken from the start to the end of W to the end of wave X, giving you a target between a 62.8k and a 62.3k. You can see that the target area for your wave Y is also in confluence with the 6-hour gap top, which is interesting support. In that case, what I like to look for is price to test this support, move back above, create some structure to the upside, potentially with some bullish CVD divergences or at least a solid impulsive Elliott wave structures, and then we can be interested for price to move towards the upside to take out the high of the range that we have been in over here. The invalidation for this scenario is price moving to the upside and taking out the high of X at 65.1k. You can also see that I have the 886 on my chart. This one is taken from this low to the high here, which therefore increases the probabilities that this move up is corrective in a wave C or Y. The reason is that the 886 is very rare for a wave 2, common for a wave B or a wave X. Therefore, it increases probabilities for a C or Y to the upside, which is a corrective structure, not an impulsive structure, which in turn increases the probabilities to still take out the lows. The most bearish scenario is a double 1-2, where we have a wave 1-2, 1-2 continuation to the downside. In this case, your first wave 1 is an expanding diagonal. Now, an expanding diagonal is very rare, never preferred unless all of the other scenarios fill, and the one scenario that pretty much then has to fill is the three-wave corrective structure WXY. So in other words, in the most bearish scenario, you want to dump straight through this support. You don't want to range here for too long, because here you're looking for wave 3 towards the downside, which should be a very high volume, deep, sharp move, scary move towards the downside. The first wave 2 retraced to the 0.5 Fibonacci taken from the start to the end of wave 1, which is a common target for a wave 2. Your second wave 2 also hit the common target area for wave 2, the 618 to the 786, very nice. And if this is the high of your wave 2, you want to see impulsive continuation to the downside to at least the 6-hour gap top, but preferably you're gonna lose that area. The most bullish scenario is of course that your low is in and we are looking for continuation to the upside. And in this case, we then need a finished zigzag ABC to the downside or look for a sideways double combo WXY with a triangle in wave Y. Let's start with the zigzag. A zigzag is a 5-3-5 structure where your wave A then has to be an expanding diagonal structure, which again is very rare, never preferred unless all of the other stuff fails. And your wave C went to the 0.618 trend-based fib extension taken from the start to the end of A to the end of B, which is a rare target for a wave C. Also, if this is the low of your wave C and you want to see bullish continuation, then you have to start with a wave 1 to continue up, but your wave 2 also hit the 886, and the 886 is a rare target for a wave 2, so it doesn't really give high probabilities to a finished zigzag. Therefore, I also have a WXY on my chart. This WXY is a different WXY. So this is a double zigzag, a zigzag in W, corrective X, and a zigzag in a wave Y. And this is a sideways double combo. Make sure to check out the educational playlist on my channel if you really want to know the difference. But what we're looking for here is an ABC down in your W, then we have X, and then wave Y can either be a zigzag, a flat, or a triangle. Now in this case, if this is your low, we're not looking for a zigzag, of course, in an A, B, and then a wave C. Also, we won't be looking for a flat because then you have A, B, and a wave C. Still high probabilities to take out this low. So therefore, we need to look for a triangle in a wave Y, where you then have a W, X, and then you have A, B, C, D, E continue towards the upside. However, it is first of all very early to talk about triangles. Usually I only really like to talk about triangles when a wave 4 is finished, which would, or sorry, a wave D, which would be this high over here. And also all of the waves in a triangle should be a 3-wave corrective structure, and they should be zigzag family structures. 4 out of the 5 waves have to be a simple zigzag ABC, and if one of the waves is more complex, it is usually wave C being a double or triple zigzag. This move to the downside here does look like a single impulsive structure, doesn't really help with the triangle scenario. But from a price perspective, it's actually very easy. If we continue ranging here for a significant amount of time sideways, the probabilities increase for price to move towards the upside, and of course the invalidation is taking out that low. CVD divergences. We had bearish CVD divergences as price moved towards the upside very nicely. Yesterday with the video last night, we were looking for the low to be taken, but I mentioned keep an eye on that 382 because it hasn't been hit, so it would be nice to still retrace to that 382. Took the lows, moved towards the 382, hit the target area as well for a B as well as a wave 2, creating bearish CVD divergences while hitting the golden pocket taken from the high to the low. So that worked out very nicely. Now you can also see I have a green line on my chart, which is a bullish CVD divergence. However, because of the bigger bearish CVD divergence and the move to the downside, I'm not interested in this bullish CVD divergence. What I want to see is price ranging or grinding towards the upside and then create some new bullish CVD divergences. You can see here on the 15-minute time frame the divergences that I am talking about. Lower high on price, higher high on the CVD in yellow here, which is a bearish CVD divergence. And then over here locally you have a higher low on price, but a lower low on both yellow and blue. But for me to really change probabilities for upside, then I want to see that local range towards the upside. I want to see price move sideways, grind up and build new bullish CVDs. At the moment, the bearish CVDs have priority. So if we then look at the probabilities of the different scenarios, then at the moment on the 15-minute time frame, the probabilities would be higher for the WXY towards the downside, a 3-wave corrective structure, keeping an eye open on the 6-hour gap top because that is pretty much the support that you want to see held for this WXY. And then on the number 2 spot, we have a double 1-2, which is of course your most bearish scenario, 1-2-1-2, bigger wave 3 to the downside, or the bullish scenario where you look for continuation up. Now for the bullish scenario to increase, I want to see local signs of strength. In other words, I need to see price range sideways / to the upside, see some bullish CVD divergences as well, some increased volume, structure, etc. come in, right? And then I'm happy to change probabilities, but at the moment the probabilities are higher to still take out these lows. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves Guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.